Welcome back to America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates with Nolan Baker and Chaz Price. 419-794-3030 is the phone number. The website, arhq.com. Forbes says that Magic Johnson is worth $1.2 billion at age 64. He's actually the fourth athlete to cross the billion-dollar threshold, joining fellow NBA stars Michael Jordan, LeBron James, also golfer Tiger Woods. But get this, only $40 million comes from his time on the basketball court. Turns out he's also an MVP when it comes to investing. He has made the bulk of his worth on putting money into sports teams, Starbucks, movie theaters, Burger King's 24-hour fitness, and his controlling stake in an Iowa-based life insurance company. So it goes to show, and it's another great reminder of the power of having multiple streams of income. How do we go about doing that? How can we find something similar, even though we don't have a Hall of Fame NBA career behind us?
Well, I mean, if we look at it, none of us really have the $1.2 billion that Magic Johnson does, but we absolutely can learn and take away a lot from, what he's been able to do. For me personally, when I first moved here to Toledo, Ohio, my wife and I, we bought a house over on Hoyles Avenue. We bought a duplex. We rented it, half of it, and lived in the other half. And we got the income stream from that rental property and used it to pay our mortgage. Ended up buying that property for $60,000. Years later, when we moved into our second house, sold the property for $96,000. And so, if you think about it and you think about rental property, Chaz, you and I had a little bit of a conversation about this. I think that's some of the ways that people need to start looking at their financial assets. They need to look at it like rental property, like how I got rental income from that property. I own a commercial piece of real estate here in Arrowhead Park, America's Retirement Headquarters. We get rental income from our tenants. We work with a lot of farmers. They get, income from their property. When you're talking to people about income, sometimes the word yield, which is what we use in Wall Street terms, doesn't always makes sense when an investor is thinking about their stock market part of their portfolio. But how do you explain, developing the multiple streams of income when somebody's looking at their retirement accounts?
Well, when you think about it, there's only two things, in my opinion, that work. It's either you or your money. And so the concept of yield, to me, deals with what am I getting in exchange for what am I investing? What on an annual basis? What sort of income can I expect from this investment? And there are different types of investments. Some are higher yielding, some are lower yielding, but essentially it's what you're able to glean from this investment. So think about, like you talked about a rental property. Your yield in that case is the rent that you're getting. And depending on how aggressive, or I should say, how likely it is that the person you're renting to is going to pay you rent is going to probably have some implication on how much rent you're going to charge them. So if you're a little bit nervous, maybe the person is frequently out of work, a little bit more risky job or something like that they're in, you may require a little bit, maybe a lower credit score. I know a lot of renters sometimes they have to give a credit score, but maybe that's going to indicate that you probably want to charge this renter a little bit more money because it's more of a risk to you as the landlord that you're not going to get your rent. And conversely, if it's maybe a little old lady receives Social Security, the money's directly deposited right into your checking account, probably not a whole lot of risk there, and so you could feel comfortable charging maybe them a little bit lower income. So that's part of the conversation on the investment side that we have with our clients is we're going to look under the hood. We're going to look at your investments. We're going to see what sort of rent are you getting, but who are you renting to? Are you renting to what we would refer to as a high yield customer? Like, in the 80s, we referred to them as junk grade bonds. Now they're higher yield. But it just indicates to you as an investor that there's some potential risk there. There's a potential maybe for a lower potential for default in that case, and in exchange for that, you're getting a higher income. That's actually a pretty good opportunity right now. We're seeing in some high yield spaces. We look to see what the yield is over and above what we can get on a treasury. So a U.S. Treasury bond, Nolan, as you know, is considered the safe haven of the world. There's not a whole lot of risk there that the government is going to default on debt. But it's still possible, but we still consider that to be a risk-free rate. What amount of money are we going to get on an annual basis to entice us to invest in something other than a risk-free rate? And those are what we would refer to as higher yielding bonds. And we can help our clients determine what their yield is, what their, who they're investing in. Is it government bonds? And even more so, is there a better opportunity? Is it an opportunity to get, 6, 7%, 8% interest possibly on a higher yielding bond? What's the risk, that we're going to continue to receive that income? And is it worth it to us in our investment strategy to take that risk? And those are some of the questions that we help answer surrounding the concept of yield.
Yeah, it is. It's the risk premium trade-off. And really, if you look at Magic Johnson, it comes down, to the power of multiple streams of income comes down to diversification. He didn't have all his eggs in one basket. He was diversified between the stock and bond market and investments outside of there. I can think of an example of somebody who we recently met with, John. And in John's case, he had about a $360,000 portfolio. He's retired at the age of 70. He had most of his money in a traditional fixed account. He's taken $2,000 a month from his investments. The fixed part of his portfolio was paying 1.8%, and that was the rate that he had got several years ago. And, quite frankly, 1.8% wasn't bad several years ago. In fact, it wasn't bad 2 years ago. Or a year ago. It wasn't until recently that rates had dramatically increased. But when we did the portfolio analysis for him, what we were able to do is able to show him how he could take that 1.8% and upgrade it to a 6.15% fixed rate. So something that didn't have market risk, no market fees. And that, in his portfolio provided him $500 a month more income. The other thing is when we did the analysis on his stock portfolio, he had a good stock portfolio, in my opinion. In fact, the yield on it, or the income that was generated, was 2.96% yield. But if he took a smaller basket of more defined income-producing strategies and added an income strategy, he could boost his yield up to 4.41%. That increase is going to increase his predictable income by another $250 a month. So you add the $500 and the $250 together, that's $750 more predictable income simply by doing that portfolio analysis. So, whether it's looking at bonds, dividend-paying stocks, some people talk about real estate as we had an example there. Now, there's pros and cons to real estate and or any other investments that you do. But things like, FDIC-insured bank CDs, those rates are up. High-yield money market funds, those rates are up. Annuity rates are up. There's a lot of things that are out and available right now. And so the bottom line is if you want to create a powerful multiple stream of income, today's environment gives you a lot of opportunities to be able to do so. And what you want to do is start with a portfolio analysis. Give our office a call. We'll slice and dice the numbers. And as Chaz points out, all roads lead to income. And there could be some ways to boost your income right now in today's environment.
Now, let's start this with giving a call, 419-794-3030. As Chaz says, you spent your entire career working for your money. Now it's time to make your money work for you. Looking at multiple streams of income, some that may not necessarily be tied to the market, can be a valuable way to make sure that your retirement goes the distance. So again, 419-794-3030 is the phone number. The website is arhq.com.